All right, welcome back everybody. My name's Austin. Today I want to update you on the latest Ethereum, Uniswap, Yearn Finance, Nano, Enjin cryptocurrency, and much, much more. So check the timestamps down below, find what you like right now, and let's jump in, starting with the big kahuna, Bitcoin. The Bitcoin short-term holder, MVRV, this is a Bitcoin fundamental indicator, has been holding its positive ratio for the last 6 months and has just bounced off the neutral line yet another time. It seems like not many people are talking about this, and just to define what a short-term holder MVRV is, let's go right to the source, Glassnode, which is an on-chain market analyzer, investigator, and for this metric, a short-term holder MVRV takes into account the UTXOs younger than 155 days and serves as an indicator to assess the behavior of short-term investors. Okay, that's an interesting metric. And again, that metric has been positive for the last 6 months and has bounced off the neutral line yet another time. Historically, holding this support level is indicative of an ongoing BTC bull market. Let's check it out now. This is what the short-term hodlers have done historically. The market starts to turn bullish, they start to hold. The market starts to turn bearish, and they start to sell. So let's zoom in to where we are right now. Obviously, Bitcoin had a little lull. It stalled out in the last month of October. We bounced off the short-term holder MVRV, and we're still going. What do you think? What does this mean to you as a Bitcoin holder? Because obviously, yes, we could always drop below, but you'll notice that price-wise, we're reaching higher highs. This indicator on the cusp right now of reaching its next local high. And when it flies, be ready for it to fly. Now, I'm going to be paying very close attention to where this moves next. If we start to dip, I'll tell you. If we reach a further higher high, I'll tell you. Stay subscribed, hit the bell notification right now. I'll keep you updated. Okay, next piece of news on Ethereum. Ethereum 2.0 deposits have reached 10% of the launch threshold as the deadline approaches. And we have about 2 more weeks till that 10% has to become 100 or else it's delayed. Right now, the deposit contract for Ethereum 2.0 now holds about 50,000 Ethereum, and the minimum required stake would be 500,000 Ethereum. Just want to keep you abreast of the situation. And by the way, this I did not know. While Ethereum 2.0 is set to launch on December 1st, it is only if the minimum stake threshold is reached 7 days before that date, 7 days before December 1st. And here is a graph of the historical balance for the deposit contract thus far. And as you can see, the influx of new deposits appears to have slightly tapered off as the majority of prospective stakers joined within the first 3 days of the launch. So we'll see. I mean, obviously people want to earn passive Ethereum. That is the incentive to deposit your ETH. The drawbacks, of course, include each staker must go through a dedicated launch pad to register validators with a 32 Ethereum stake each. So that means every 32 Ethereum you have, you got to set up another validator. And also, once you deposit that 32 Ethereum, you can't just take it out willy-nilly anytime. It is locked up for years until phase 1.5 of ETH 2.0 comes out. So we'll see. We will see. And by the way, some Ethereum OGs may have come up with a solution. Ethereum heavyweights launch liquid stake loans to ease the Ethereum 2.0 lockup. So there may be a solution, and it is being called Liquid Stake. Announced Wednesday, Liquid Stake, which is being launched by crypto trading firm Dharma Capital, will allow ETH stakers to take out USDC stablecoin loans against their staked assets while earning staking rewards from the new network. So basically, not only will you get your ETH staking rewards, but you'll also get a USDC stablecoin loan, basically so your value can stay liquid. You can still use that money while your Ethereum is staked. And like I said, this is from Ethereum OGs, which are also going to be depositing their ETH in the ETH 2.0 contract. U.S. registered investment fund Dharma, founded by former Consensus stalwarts Andrew Keys and James Slazas, intend to allocate over $50 million worth of Ethereum to Ethereum's new deposit contract. So it's progress. Let me know what you think about this. Next piece of news for Wi-Fi Yearn Finance. Polychain Capital has just invested $8.2 million into the Ethereum token Wi-Fi. And this was an open market purchase. Obviously, the price is up from last week. And this means the US-based crypto fund now owns over 1% of the entire token supply of DeFi protocol Yearn Finance. And the total supply is only 30,000 Wi-Fi tokens. So how many does Polychain now own? Crypto fund Polychain Capital has picked up a further 141 Wi-Fi tokens in a move yesterday that expanded on its investment in the decentralized finance protocol. Keep in mind, the firm purchased 329 Wi-Fi tokens just last week. And obviously the price is up more than 100% since last week. I did a deep dive on Yearn Finance Wi-Fi token about a month ago. Find that on YouTube, check it out. But now, the fund can boast that they now own 1.6% of the entire supply, all purchased from the open market. Let me know what you think about this. As I get more information, I'll keep you updated. Okay, next piece of news for all Uni holders. Uniswap's community call will discuss extending liquidity mining rewards. So if you hold Uniswap token, check this out. The call is scheduled to discuss several core governance issues central to Uniswap, including the future of its liquidity mining program. And to note, their liquidity mining program, it's very new, and it's really what kept them in the game. After a slew of rival DEX clones sought to siphon away their Uniswap users, they created this. Uniswap airdropped its native token Uni to users and launched its own liquidity mining program in mid-September to keep the users on their own exchange. And now that is coming to an end. Uniswap's current liquidity mining program is scheduled to end on November 17th, with the call set to discuss whether to extend the existing program or revise the scheme. Well, why would anybody want to end it? Why not just keep it going? Because basically it dilutes the token. It has a daily supply just flowing into the ecosystem. The initial program allocated 5 million Uni for airdrop to liquidity providers, so this is different than people like you and me that just used the MetaMask wallet, used the exchange, got our tokens. Airdropped to liquidity providers in total equal to 83,333 tokens daily, diluting into the ecosystem. So basically it's a double-edged sword. There's good and there's bad. Many believe the Uni airdrop and liquidity rewards program helped the exchange secure its position as the leading DEX in the face of numerous vampire attacks. However, the program may now have a negative impact on the price performance of the Uniswap's governance token. So basically, I just want to keep this on your radar. This call, this discussion is happening tomorrow. Quite the experiment. I'm not sure which would be better. Comment below your thoughts if you have an opinion. Next update on Neo. Neo 3.0 is now 90% of the way complete. Very interesting that it is right in line with ETH 2.0 about to launch, Neo 3.0 almost about to launch. So if you're a Neo holder, get excited. And the nuances in terms of what's changing, what can you expect from a Neo 3.0? Well, the cornerstone of our efforts in Neo 3.0 will be a robust blockchain implementation with a higher throughput, enhanced stability and security, an optimized smart contract system, and a feature-packed infrastructure set up for diverse business application scenarios. Obviously, that is sort of the broad strokes, but basically they just want to make it easier for more dApps to be made, created, used on their blockchain. The problem is, currently, the relatively high cost of deploying and running smart contracts leads to a reluctance in smart contract usage and development. This is aiming to fix that. In Neo 3.0, we will address this issue by significantly reducing the deployment and execution costs of smart contracts, thereby expanding the application scenarios of gas and increasing the number of dApps. Okay, should be interesting to watch. And one more thing. Neo 3.0 will have internet resource access. Neo 3.0 will have a built-in Oracle implementation that allows smart contracts to access internet resources during execution. So I would guess they're not going to be partnering with a chain link or something like that. I'll keep you updated. Next piece of news on Enjin cryptocurrency. Skymarch Gaming Studio has partnered with Enjin, will integrate NFTs into 3 games. Okay, so who is Skymarch Gaming and what are the games? They are actually a Canadian gaming studio, and this is a move that will see the studio integrate with Ethereum-based non-fungible token NFTs into their 3 games, Zeal, Crystals of Fate, and the Galaxy of Lemuria. I think as an Enjin holder, this is what you like to see. You like to see outside studios finding so much value in something. They're saying, hey, we'll go to your blockchain, help us get NFTs into our games using your blockchain. The core team behind Skymarch brings over 30 years of game industry experience, which stints at leading companies like Ubisoft, Riot Games, Disney, Electronic Arts. And as part of the deal, Skymarch will also take part in Enjin's multiverse, as per a notice on November 5th, enabling players to use items across all 3 upcoming titles. Enjin's multiverse is something they've been talking about for a while. I think they have over 10 studios officially in their multiverse, which is just an interconnected set of games where items can be brought and used in other games. Very interesting. Okay, that is the video. My name's Austin. See you tomorrow.